Josh, if you take a look.
What is going on, everybody? Good morning and happy Wednesday. Welcome back to the Daily Grind. I'm your host, Chump Change. This is live and recorded, and I'm working with new headphones. So if you guys just heard that little news clip play before we went live, that's what happened. I touched the button on the side. So we're going to see how this goes. Hopefully you guys can hear me. I'm not muted today. All right, perfect. Happy hump day. All right, let's see who's in the chat and then we'll get into this. Mr. Fudweiser, good to see you. Sadie Sometimes, Alexander Fleener, good to see you as well. Leo Lustig, Steven Cicero, my man, good to see you, buddy. Let's see, Nick K, good to see you. Andrew Masad, TGIG, good to see you, buddy. Crypto Craig, my man, good to see you. Haven't seen you in a while. We have Mr. Chris Hanley, Nerd Beast, Sustainable Crypto. Everybody else that I may have missed, I apologize. Financial Failure, good to see you. That short you had yesterday was actually pretty funny. I actually did like it. So guys, if you don't know who Financial Failure is, he does have a new YouTube channel. Go check him out. He's in the chat. All right, let's get into this. Let's see how we're looking today. As you can see, we got some red behind us, unfortunately, but not too bad. Could be worse. 27,122. At least we're in 27,000. We're still holding there, which is pretty good. We have Ethereum 1630. Let's see, Dogecoin looking at 6 cents. We have Litecoin 65 bucks, XRP 51 cents. We have BNB 216. Let's check out Crypto Bubble, see what we got over here for the day. Oh, sorry, this is the week rather. TON is up 29.2%. That is crazy. We have Caspa up almost 10%. A lot of these little coins are up, but they did take a shit, you know, a couple weeks ago. So is what it is. Let's see. All right, let's get into the day. We have a daily rug pull. No, a lot of things are red though, actually. Holy shit. Caspa is still pumping though. Caspa broke its all-time high yesterday, I believe, if I'm not mistaken. Let's go double check that before we get into the top 10 coins. I want to see. I think it did. Man, it's 5 cents. That's awesome. That's good for profitability for everybody that has a Caspa miner. Let's see real quick. Yeah, it did yesterday. Well, according to CoinGecko anyways. That's awesome. Congrats to anybody that is actually holding or mining Caspa. Good for you guys. All right, well, that's just gonna disappear on me. Let's go over top 10 coins by coin market cap. We got Bitcoin, Ethereum, Tether, BNB, XRP, USD coin, Lado staked Ether, Cardano, Dogecoin, and Toncoin. Solana got flipped by Toncoin. Toncoin's actually, let's see, is it market cap is about 300 million more apparently. Jeez, that's crazy. Litecoin still in 15th, Shiba down in 17th. Not too bad, could be worse. All right, let me not blind you guys. Check out the fear and greed index today, looking at 47. Not too bad. I mean, it's pretty much the same as it's been for a while. So all right, let's go over a few things today. We have a couple random things, right? Bitcoin analysis predicts spicy BTC price into the FOMC meeting as 27k holds. So we're gonna have to see how things go today. Sam Bankman-Fried's father dragged his mother into FTX US salary dispute. This whole thing's so fucked up, it's not even funny, but whatever. It is kind of funny. Let's watch Crypto World over here. They kind of get into it a little bit, explain a little bit about it, and then we'll go from there. Guys, if you have any questions in the chat, please feel free. Links to these videos are always in the description below. Let's do it.
Today, the SEC reportedly faces a setback in its lawsuit against Binance US. FTX files suit against Sam Bankman-Fried's parents to claw back millions in alleged misappropriated funds. And we check in on the latest in crypto regulation with Sasha Gabali of The Tide. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies mostly flat today. As of noon Eastern, Bitcoin rose 0.5%, trading closer to $27,500, and Ether traded around $16.50 for a second straight day. Cardano, however, shot up 4%. Okay, let's talk about the top stories. The SEC reportedly faced a setback in its attempts to gather information from Binance US on the exchange's operations. The SEC had argued in court that Binance's US arm wasn't providing information fast enough and asked a federal magistrate judge to allow the agency to inspect the company's infrastructure. According to Bloomberg, that judge said he was not inclined to allow inspection at this time. One of the SEC's central arguments in its lawsuit against Binance US is that the company is closely tied to the international business. The regulator argued last week that Binance US was keeping assets in Binance's wallet platform dubbed Cefu. Now CZ is taking to X, formerly Twitter, to deny that claim. He says that Binance US does not use and has never used Cefu or Binance Custody, which is the old name of the wallet before it was rebranded to Cefu earlier this year. The problem is that contradicts statements from Binance US's attorneys in court. They told the court on September 12th that the company did use Binance's wallet service, Cefu, but that it had sole authority to access those funds. We reached out to Binance US, and a spokesperson declined to comment. Next, FTX has sued Sam Bankman-Fried's parents. In a Monday court filing, the bankrupt crypto exchange looked to recover, quote, millions in fraudulently transferred and misappropriated funds by SBF's parents. FTX claims the pair exploited their access and influence within the company and enriched themselves at the expense of the exchange's customers. That allegedly includes thousands of dollars in hotel stays, a $10 million gift, and $16.4 million in luxury property. We weren't able to reach
Do we all hear that? A $10 million gift? That's crazy. That's a way to get out of taxes when you like gift money in a business, which is kind of crazy. But that whole Binance thing too, I totally forgot. Binance got denied about the, them digging into the Binance.us, or the SEC digging into them rather. It's kind of crazy.
Their lawyers for comment, but the New York Times reports that the attorneys for SBF's parents said the claims were completely false and designed to hurt their son's chances at trial. Last, Hong Kong plans to scrutinize...
That's such bullshit. I honestly believe that there's some shady shit going on with his parents. There's no way there's not. Like, you just all of a sudden... I'm sorry, as like a young kid, you don't know to go over and start giving all your money to politicians and all these people that matter. You know what I mean? That's just not how it is. Like, your parents definitely coached you into that. Crazy. I don't know.
Crypto regulation following the arrests linked to the crypto platform JPEX. Hong Kong's chief executive John Lee made the announcement today, arguing that the incident highlights the importance of investing in crypto platforms that are licensed. He added that the Securities and Futures Commission will make sure that investors are sufficiently protected. Police in Hong Kong arrested 8 people over allegations of fraud at JPEX, which AP reports impacted more than 1,600 investors and more than $150 million in assets. The arrests came after last week's announcement from the commission that JPEX was unlicensed. The crypto platform announced yesterday that it was suspending some transactions on its platform amid the probe. All right, let's talk about U.S. crypto regulation for our main story. There have been a growing number of developments in recent days, including a bill last week from Congressman Tom Emmer meant to provide regulatory clarity. And just yesterday, news signs that Senator Elizabeth Warren's crypto money laundering bill is gaining more support on Capitol Hill. Among the 9 new supporters are the Democratic chairs of the Senate Homeland Security and Judiciary Committees. So I spoke with Sasha Gabali of the TIE to get his take on the shifting crypto regulatory landscape here in the States. Okay, so let's talk first about Senator Elizabeth Warren and her new crypto money laundering bill. It's gaining traction on Capitol Hill among Democrats, and this bill is really focused on tackling crypto crime versus something like regulatory clarity in terms of which agency is in charge of crypto or providing clear guidelines for crypto investors. I'm curious, is that what works in the U.S. right now in terms of getting legislation passed, getting support? Is it focusing more on crypto crime and illicit transactions versus, say, more of that clarity that a lot of businesses are asking for?
Yeah, I think that's a great question, right? I think these days the crypto crime has really been the focus, especially in the past year. And obviously the ongoing trial with the FTX/SBF case is obviously shedding some light on this as well. I think that's a lot of a fear play, right? And it's playing with fears, and for people to be able to invest in a growing asset class, right? First, you need to overcome those fears. And so I think that's what it is tackling, right? It's making sure that pure crime is not as easy to do as it might be right now. And so I think that's the important part of the intention. Then there's this other bill that's trying to prevent the Fed from getting CBDCs down the line, right? And again, the intention behind it is to be able to prevent the Fed from doing mass surveillance of citizens. But what does it really achieve, I think, is the bigger question, because at the end of the day, what is it really going to prevent them from doing? And if you are in a mindset where we need to be competitive compared to the rest of the world, what does that mean for crypto in the US and talents moving offshore? And I think that's the bigger problem that regulators have to deal with, is both mitigating the crime aspects, right, and regulating them just like in traditional finance and how we've always done it, and still being competitive as an innovation center in the world.
I also want to ask about Tom Emmer's bill. It lays out some clear definitions for blockchain developers that don't hold funds, saying that they're not money transmitters. Are lawmakers on the same page with what businesses are asking for in one chamber versus the other?
I think that's really the key, right? That's really a key element. Knowing where knowing where you have to be regulated, how and what you need to put in place. The question about the developers is also related to that, but quite new, in the sense that if you were building a tech company, if you were building just technology and writing code that you would allow other people to use, people using the code would be the ones liable for misuse, right? Well, obviously not if you're writing ransomware code, like something that is clearly illegal. But if you're building open source code to allow people to build platforms that can be completely legal, it gets really, really difficult to pinpoint to why a lot of the cases around developers, especially for decentralized exchanges, right? I think there is a lot of lack of clarity for developers and around all the decentralized exchanges. Do we regulate at the code level, at people who are building the front end part that is going to interact with the users? But even when you try to decentralize all of that, who is responsible at the end of the day? And is it reasonable to say that a developer, just because you're building some very potentially world-changing technology, that you're responsible for any potential misuse of it? I think that can become very quickly unreasonable, and I think there is a lot of fear that can create a lot of fear among builders and people who are building those technologies. And I don't know if I would feel very comfortable writing code for a DEX in the US.
Obviously, I feel like if people have been watching Crypto World for some time, they know that we've been talking about the SEC since the beginning of this year, when they really started this crackdown, and now we've seen several lawsuits where they've lost or maybe haven't gained as much ground as they thought they would. Is the concern for crypto businesses around the SEC and its mandate to regulate the industry waning? Are they less concerned about the SEC's influence over crypto regulation as these legal battles have sort of played out?
I think we're still early there. We're still early. There's definitely the Ripple case has been appealed, and we'll see where that goes. It's really early to tell who eventually will get the power there.
Who do you guys think is gonna win in the Ripple case? Do you think the SEC is gonna get things turned around? Do you think Ripple's still gonna take it home and not get any backlash for it? Let me know what you guys think, because they did file the what was it, a retrial type deal or whatever the hell they filed to the courts after they lost the lawsuit. But yeah, I don't know if the judge would ever turn it around if there's any other new evidence.
The question whether there needs to be regulation or not, I think is clear, is there needs to be some regulatory action, and a lot of that now is being driven by the MiCA regulation in Europe, for example, right? And so I think seeing how crypto businesses adapt to that first is going to be an interesting learning lesson. When it comes to the cases that are being brought in the US, especially with the SEC, it's been a lot going through enforcement, right? And so at the end of the day, it's all in what in the judges that are involved in those cases, and these are very long processes, right? I don't think we're going to see something in the next couple of months that is going to bring the clarity that is desired in this space.
do you see any chance that we end 2023 in a better position with any more clarity than we came into it here in the U.S. while other countries are moving ahead? It doesn't seem like the momentum's on the U.S. regulators' side here.
I personally think that's unlikely, and especially with the new NYDFS proposals, I think it's still not clear who regulates exactly what. Recently, there was, the Financial Stability Board made some recommendations to align more globally different regulators together. But there is still a big question of who does what and who regulates what and who is in charge of what and how we can really establish strong similarities between some of those crypto assets and their sort of traditional finance counterparts. And when you add to that all the uncertainty around the SBF trial and all the information that might be released around that, not only as a strategy to influence opinion, but also all the things that might come up in the public documents that will be released. So I think that part is going to be important for regulators, because they need to address risks, and some of those risks are associated with fears. And so the
whole time listening to this guy, this is all I can think of. I'm going to hell, and I didn't mean to cut him off, but this is the only thing I can think of this entire time is that movie Ratatouille. He looks just like him. It's a riot.
These are the things that they will need to address in their plan to regulate crypto.
All right, that's all for Crypto World today.
Oh, sorry I ruined that, but I had to catch it before he disappeared. Tell me I'm not right. That looked just like him. It looked exactly like him. Oh, it's a riot. All right, let's get into the next thing. So be prepared for the Fed meeting today. Is Bitcoin about to pop? I'm wondering the same thing. I wonder if it's going to tank or not. I mean, you guys let me know what you think. People are calling for 20K or around 20K. I don't know if it's going to happen. We'll have to see. You guys let me know what you think about it. Let's get into it.
The Fed kicking off its latest two-day policy meeting today. Central bankers widely expected to hold rates steady, but investors are going to be watching and listening closely for any hints about future rate moves.
The September Federal Reserve meeting is happening today, and with Bitcoin rallying higher, with Binance US winning against the SEC, and with Sam...
Congrats to Binance, by the way, for winning that, because that was some bullshit.
Bankman-Fried's parents possibly being the true masterminds behind FTX. As a crypto holder, let's talk about how this affects you. Well, number one, a lot has happened since the last Fed meeting about 2 months ago. Here to explain is the former Richmond Fed president on how Jerome Powell is thinking today and what you should expect next.
Well, they have to be happy with the inflation numbers they got in June and July, although August wasn't as good as could have been. They've had moderating inflation expectations. They've had a labor market that's been cooling at a comfortably gradual pace. But at the same time, I think they have to be worried about whether June and July represented transitory good luck. The housing market has been firming for several months. I haven't looked at this morning's numbers yet, but it's been on an upward trend. Prices and starts putting pressure on resource utilization. There's a big pipeline of medical cost increases that are going to hit the CPI later this year, and that'll pass through to higher inflation numbers on the core side. And they've got to look at wage inflation being too high relative to 2% inflation rate. And so I think they're going to be worried that they might need to do more. They might need to keep up pressure. So I don't expect them to send any overt signal that they're done for this cycle. I don't see the upside in that for them. I think Powell will try and leave the door open for further rate increases.
So while the vast majority of experts looking at the current federal funds rate are still expecting a hold, meaning no increase, no decrease, at least for this meeting, because the United States inflation is still above 2% and even started to tick back up last month, it's still a big unknown on how the Fed will finish this year, as explained by the former federal vice chairman, Roger Ferguson.
I think there's likely to be a pause here, but a clear possibility that the November meeting is, as they say, a live meeting. I don't think they're ready to say we are now done. and partly because some of the factors you talk about, such as oil creeping up, shows that while there are, a slowing in general, there still could be some things that drive inflation pressures in the wrong direction. So I think this meeting is a pause, but with the possibility of one more rate hike. And they'll tell us because they're also going to release their summary of economic projections. So we'll see what they're thinking as well.
And the results that we get from the Federal Reserve tomorrow, be sure to subscribe. I'll keep you updated. Will the Fed push us into a recession? And how likely is that?
I was just saying recession next year, first half of the year, second half, no recession, slowdown, labor weakness. Does it ever come?
I think we're certainly going to see continuing slowing. And I think whether there's going to be a recession has become more of a close call. Those that are expecting a recession are pointing to the fact that consumers are weakening as well, and that we don't know yet the full impact of the dramatic hiking that's gone thus far. So I would say recession still possibly on the table, though the odds have decreased. Slower growth certainly on the table. And let's hope, fingers crossed, that in fact the elusive soft landing does actually occur, but not a done deal yet on any of those points.
And in bigger news, before we talk SBF, just in, a judge has denied Gary Gensler's request to inspect Binance US. So a federal magistrate judge has denied the SEC's request to gain immediate access to Binance US's software, asking the regulator to provide more specific requests for discovery. So a judge...
But honestly, that's a good thing, because Gary Gensler, dude, he's just pointing and shooting in the dark. Like, that's all he's doing. He's just trying to grab something that will hold up in court, and clearly it's not working.
Just saying, you can't just have full access into this business. Give us a specific reason or specific information you want out of Binance US, and maybe we'll grant that. Now,
but the only terrifying thing for Binance is the fact that they didn't separate Binance.us versus Binance itself. So keeping those two as the same entity, it's going to open the doors for everything within Binance, even though it's not inside the US, if they get granted access inside Binance.us, which kind of sucks.
The SEC is suing Binance US. That's why they're allowed discovery in general. But this hearing, which was just held on the 18th, was to discuss the SEC's motion to compel Binance to hand over detailed information and make its executives more available for depositions. Well,
oh, that's right, too. I forgot Gary was freaking going to go work for Binance, wasn't he? Didn't he go to an interview or some shit and get offered the job? Or I don't know if he got offered the job or if he was just going for the job. I can't remember, but I totally forgot about that. Thank you for mentioning that in the chat. That's hysterical.
That was denied. In the hearing, the judge said he wasn't inclined to allow the inspection at this time. Alternatively, he proposed that the SEC should come up with more specific requests for discovery and speak with a broader range of witnesses. Now, this has been contentious ever since this lawsuit started. And just to be clear, so you have all the information, the SEC believes Seifu, rebranded earlier from Binance custody, may also be serving Binance US customers and therefore being used to shift US customer funds out of the country in violation of a previous agreement not to do so. Meaning, was Binance US using Binance International's custody entity, and thus meaning were US customer funds being pushed offshore? Well, CEO of Binance, CZ, says Binance US did not use the entity at the center of the recent SEC allegations. In a direct quote, "For the record, Binance US does not use and has never used Seifu or Binance custody. You can't just make this stuff up." And breaking news in the lead up to the SBF trial happening in October, Sam Bankman-Fried's parents have officially been sued by FTX, accused of stealing $26 million in gifts and property. So debtors of...
I love how they say gifts, because it's such a scumbag move to get out of taxes. It's so fucked up.
The bankrupt cryptocurrency exchange FTX have launched legal action against the parents of FTX founder SBF, alleging that they misappropriated millions of dollars through their involvement in the exchange's business. And
a $10 million gift to themselves from the exchange. So from your pocket to theirs.
Here's how that happened.
Bullshit.
The plaintiffs argued that Bankman and Fried, so those are his parents, father and mother, Bankman and Fried, exploited their access and influence.
Wait, what? That's his father and his mother? So that's why it's Sam Bankman-Fried? They just hyphenated their last names? Weird.
Within the FTX empire to enrich themselves at the expense of the debtors in the FTX bankruptcy estate. The debtors alleged that SBF's parents were very much involved in the FTX business from inception to collapse, contrary to what SBF has claimed. In a direct quote from the complaint, it reads, as early as 2018, Bankman described Alameda as a family business, a phrase he repeatedly used to refer to the FTX group, which is the overall entity that controlled everything. Even as the FTX group descended into insolvency, Bankman and Fried profited handsomely from this family business. And just how big was the father's role in this? According to the plaintiffs, SBF's father, a Stanford law professor, had broad authority to make decisions for FTX Group. As its de facto officer, Bankman also held executive positions on FTX Group's management team, and SBF's mother, also a Stanford law professor, was actively involved in FTX's political donations. According to the allegations, Fried served as the single most influential advisor in FTX Group's political contributions.
Obviously. That's funny. I didn't listen to that part, but that's exactly what I said. Like, there's no chance that Sam or SBF knew to go and put money in these people's pockets. Like, his dad definitely coached him into that, or his mother, whoever. That's crazy.
Repeatedly calling upon FTX to donate millions directly to Mind the Gap MTG, a political action committee that she co-founded. With the SBF trial set to occur on October 3rd of this year, make sure you click subscribe.
That'll be juicy. October 3rd. Shout out to Altcoin Daily for that. All right, let's see. This video was posted an hour ago. Even if the Fed raises rates one more time, markets will still rally into the year end. I want to see what is said over here, even though this isn't like fully crypto related. It's still about markets in general and the rate hike that could be coming today. So let's listen to this and see what they got to say.
Right now, we're seeing futures, fractionally up higher right now ahead of the Fed decision today. So what are you watching for? What kind of impact do you think it's going to have on the markets?
Yeah, big day today. I think, to kind of just lay it out there, I do think that whatever impact it does have on the markets is sort of short-lived. It doesn't really change my view going into the end of the year unless it's a shock. So I do think that the wide expectation is that the Fed will hold today and talk about perhaps one more rate hike this year. But what's very important and what will be very interesting is to see what that median dot plot looks like. So how many more rates are actually being, thought of, being priced in for the rest of the year. If it's more than one, I think the market pulls back immediately and we go back into worrying about whether or not, there will be a recession, whether or not we sort of lose that soft landing that I think we're already in now. And then the other topic is actually going to be that 100 basis points rate cut that we are thinking about for next year or within the next 18 months or so. So if that's something that is then off the table, I think the market gets spooked that perhaps the opportunities that we're hoping for will be sort of hindered by higher rates.
All right, so you're paying close attention to the Fed projections, but you're a bit of a contrarian. I think a lot of people think that the Fed's done, but you're actually looking at one, maybe even two more hikes. Is that priced in? Because right now we are seeing futures move higher. I would think that would be on the thought that the Fed might be done or might not be as hawkish as they previously were.
Yeah, well, I think that there's probably one hike priced in. I think anything beyond that is actually something that will pull the market back and sort of change the course of pricing going into the end of the year. If we get one more hike, I think that the market's on track. We rally into the end of the year. There's a lot of reason that we should have some tailwinds and momentum to see a positive S&P, NASDAQ, maybe 3 to 5% from where we are now. But if we get more than one hike, I think that'll be a little bit trickier for the market, and then I think it'll be choppy, volatile. It'll probably end a little flatter.
All right, so if one more hike's already priced in, so if we hear a hawkish Jay Powell, do you think that'll lead to a sell-off at the back end of the day? We've seen sell-offs at the back end of the day when Powell's been hawkish.
Yes, and these are nail biter days for me. I almost sort of hate watching what happens. He gets on TV, he sort of does what we expect, and then it's all about the speech, right? And then you just see the market pulling back and pulling back and pulling back. But the good news about that is that, you know, if we put things in perspective, the economy is strong. You know, that 2.4% GDP, 2% before that, strong consumer continues to spend, good jobs, things like this. You know, if the market pulls back and you take all of that together, it could be a good buying opportunity as well. So you have to sort of keep your wits about you with these things.
All right. We also want to talk about one of your products. It's one of the products you're telling us to highlight today. The ticker JEPY. It's a zero-day trading option product. You said volume really picked up yesterday ahead of this Fed decision. What does that tell you about investors?
Yeah, so what this does is actually harvests income. It essentially looks to sell slightly in the money puts that are expiring within 1 day or essentially 0 days to expiry. The trade goes on at the close and it goes off before the next day expires, and the puts settle to cash. So essentially, it can generate income between 0 to 1% a day. It could be 60% of income per year. So I think, you know, the reason that investors are piling into something like that is because they like income. They could be, you know, kind of uncertain about which stocks to pick, which stocks will be impacted by high rate hikes, and you get a lot of these income products out there, and it certainly piques investors' interest. And the volume in that, and then, you know, QQQI, which is another one that does the same thing, has just been stellar for the last day or two.
Yeah, we're looking at right now. It's up almost 1.5% in the pre-market. We don't really track these very often, so would you recommend that people put money in that today ahead of this Fed decision? Is that a wise move in your opinion?
Yeah, so the reason you probably don't track it is because it is brand new. The concept of 0 day to expiry options is actually brand new in itself. So it's something very exciting for investors to think about, a new way to think about how to generate enhanced income if you're comfortable with equity risk. So particularly if we get a market pullback, it would be a great time to get in, because you will sort of get some downside exposure on the equity. You might get a better price point to get in. And then, you know, what we do, because we're generating that income on a daily basis, you sort of soften the blow on the pull down, and you benefit in the long run as income goes up.
Oh, and then breaking news, this just in case anybody was wondering.
Bitcoin's not a security, and you better pack your bags because we're going to the fucking moon. I'm done getting dunked on. Let it rip, baby. After the last 2 drubbings in court, I would say my job is in jeopardy. Actually, I never wanted this bullshit job. Now I am left with a shame name and a booty hole that is quite stretched out.
And I think the SEC's behavior in some of it has been, I don't know, I would say embarrassing as a U.S. citizen. But
All right, I just had to give you guys a little laugh there. All right, so let me see if I can find anything else that's been going on in the last couple of days. Give me 1 second, or the last day, rather. Let me put my music back on because I screwed it all up now just to do that for you guys. All right, let me, let's see. There we go. A little loud, huh? A little loud. There we go. All right, let's see. Is there anything new that we're possibly missing over here on Cointelegraph? Let's check it out. All right, so actually this was one that I wanted to check out. How Bitcoin miners can survive a hostile market in the 2024 halving. Bitcoin mining is becoming harder, which means miners will have to spend more to receive fewer rewards, but there are still ways to be profitable. Let's see, only 7 months remain before the next Bitcoin halving in April. Let me zoom in on this. In 2024, it happens approximately every 4 years and is a deflationary process that cuts the production of new coins by 50%. Let me turn this music down. If it's too loud, I apologize. Good morning, hobbyist. What's up, buddy? Bitcoin halving is a high-profile event for crypto investors and has historically led to an increase in BTC's price. However, its impact on the mining industry is a more complex issue. It reduces block rewards, one of the primary revenue streams for miners. The 2024 halving will reduce it from 6.25 Bitcoin to 3.125 Bitcoin, which is, to me, that's pretty significant, if I must say so, because we went from 12 to 6, and I just feel like with 3, there's not much left to go around. It's crazy. That's why miners must adapt their strategies to compensate for the reduced rewards resulting from the halving. Let's explore some strategies and alternative income sources that may help Bitcoin miners amid hostile market conditions. Change in mindset. It says Bitcoin mining involves a competitive process where miners for block rewards. You guys understand this, right? The compensation is driven by Bitcoin's block time, which averages around 10 minutes per block on the protocol level. Whether the network's computing power is relatively low at 1 kilohash per second or surges to a massive 200 million terahashes per second, the same block reward must be distributed amongst miners. Let's see. The competitive environment encourages miners to prioritize energy efficiency and the use of cost-effective hardware, with each halving event, the block reward are cut by 50%. This trend towards efficiency gains momentum. As the cost of producing a single Bitcoin is set to approximately double shortly after the next halving, miners will need to explore ways to optimize profitability. They just said the same fucking thing they said up there. Let's see. The first and most important whale is the cost of electricity. Even the modest fluctuation of 1 cent per kilowatt hour can lead to a substantial $3,800 variance in the production cost of Bitcoin, according to JP Morgan. To boost their post-halving profitability, miners are exploring sophisticated contracts and contemplating relocation to countries or regions where electricity prices are lower. I'm pretty sure we're all in that same exact boat right now. They even consider power generation from stranded gas options. I believe that it's crucial for miners to secure electricity rates at or below 5 cents per kilowatt hour to maintain profitability beyond April 2024. Man, imagine for us to be anywhere near profitable, or like in a good, I guess, margin, right? When it comes to profitability, you have to be below 5 cents. That's insane. So I'm cheering for these Bitcoin jazz miners that we've been hearing about. I really want to know if they are going to come. Jingle Mining said by the end of this year, beginning of next year, I believe, the Bitcoin jazz miners are going to be released or coming to market or something along those lines. So I'm super excited for an efficient Bitcoin miner. That's exactly what we need in this scenario, at least my opinion. The second major factor demanding miners' attention is the efficiency of their equipment. For instance, daily Bitcoin mining costs can be slashed by more than 63% when upgrading from a rig with a 60 joules per terahash efficiency rating to one with a 22 joules per terahash rating. Miners boasting hardware efficiency and benefiting from lower electricity costs will be most profitable. They are the ones most likely to weather significant market events like the upcoming halving. Additionally, I suggest miners employ the third strategy that involves accumulating excess capital in mined Bitcoin during profitable periods. This reserve can serve as a buffer against the impact of reduced block rewards post-halving. When the post-halving rally occurs, miners can capitalize on their reserves by selling mined assets at a higher profit margin, helping to offset the losses. While strategies such as securing lower electricity rates, adopting more energy efficient mining equipment, and utilizing reserve capital can mitigate the adverse effects of the 2024 halving, will bring substantial pressure on miners. It can lead to the potential closure of numerous mining operations. Thus, miners will also need to explore alternative revenue streams. One promising opportunity for miners lies in projects like Bitcoin ordinals. God. Oh, it's almost done. All right. We'll keep going. Let's see. As the number of inscriptions rises, surpassing 25.5 million as of August, so does the revenue generated from transactions, which presently stands above 53 million. This trend suggests that alternative income streams for miners may gain prominence in the long term. Ordinals shift the profitability equation for miners, increasing user demands for creating inscriptions, initiating processing transactions on the Bitcoin network, and incentivizing miners to include their transactions in the next block. We can certainly expect more developments on top of the Bitcoin network that will enable miners to adapt more effectively to the post-halving landscape. As we move closer to the halving event, miners must prioritize the aforementioned strategies to optimize their profitability and stay open to the new alternatives on the horizon. Pretty good article, actually. That was a really good article. So look at this. This is the Bitcoin halving history. It shows 2012, 50 Bitcoin was per block. Then it says new BTC per block after halving. So this was in 2012, during the 2012 halving. It goes down to 25. Price on the halving day was $12.35. Price 150 days later was $127. In 2016, we had a 25 Bitcoin block reward, went down to 12.5. The price on the halving day was $650. 150 days later, $750. Then 2020 shows 12.5 Bitcoin going down to 6.25, $8,821 on the halving day, and $10,943 150 days later. So it's progressively went up. So I mean, it's one of those things where I don't see it not going up, but it might not be crazy significant for quite some time. What time is the Fed meeting? I don't know. Is it right now? Who knows? Let me know in the chat if anybody knows. Please, that'd be great. I'll look it up. Let me see. What time is it? Let me go to. There we go. Time's the Fed meeting today. Let's see. 2 p.m. 2 p.m. Yes, Sam Fisher. Thank you very much. Yeah, 2 p.m. So I guess it'll be a little while before we know, but who knows, man? Who knows? It probably, I don't know. What do you guys think? Is it going to be paused or we're going to get another rate hike? What do you guys think? Let me know in the chat. Let me know in the chat. Let's see. Sustainable crypto sounds like it landed in Long Beach, then shipped to you. Kirk, what is let me see. All right, if you guys have any questions, feel free to ask. We are just about to get out of here. I do have to go do a few errands today, so I can't stay too much longer, but I do want to see if you guys have anything. Finally bought some Tangent wallets. I was inspired. Dude, that's awesome, Andrew. Good for you, man. Good for you. It's honestly, I really do enjoy the Tangent wallet. It is fantastic, at least in my my opinion. Hold on one second. Sorry. There we go. Get this situated. My headphones sound weird as shit right now. Hopefully the music sounds fine to you. I don't know. I'm gonna change it. Yeah, my headphones are sketching out on me right now. Hold on. Daughter's calling. Sorry. My kid's yelling at me. She wants to I have to take her to my mother's today. And she's excited to go see her grandmother. So that's what we're gonna be doing. But anyways, guys, hopefully you guys have a happy and safe Wednesday. It's hump day. Enjoy the last couple days at work before payday. Not too bad. You're saying rate hikes, that's sustainable crypto. It's fine. I read lips. This game with Smokey Dan. Yeah, well, I didn't know what you was gonna say, so I was trying to keep it quiet. But all right, guys, hopefully you guys have a good day. Again, I will catch you guys bright and early tomorrow morning. Thanks for joining. If you guys can, please hit that like button on the way out. It really means a lot. Mr. Rud Puts, thank you so much for the $2.49. You're awesome. I will leave this on until that reads it, and then we're gonna be getting out of here. Appreciate it, buddy.
Smeagol miner to the moon bit swag.
Appreciate you, buddy. Thank you so much. All right, guys, have a good one. I'll catch you soon. Peace.